All right, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely visit the website at cubicleinvesting.com, and there you can download my free ebook that will teach you the basics of options trading. So today is Monday. It's March the 6th. It's approximately 11:53 a.m. Eastern Standard Time. So I put on this iron condor, which is a vertical put credit spread. Vertical call credit spread, and also a vertical put credit spread. So I sold these spreads simultaneously, which creates an iron condor. And I figured, considering that Chairman Powell is going to be speaking tomorrow, the Fed guy, and also the fact that the market finished up 1.6% this past Friday, I figured that it makes sense to put on an iron condor because the price of SPX is probably going to be trading in a somewhat tight range, and so far that is actually panning out, right? So it's trading in a tight range, although it's up 24 points. That's not really significant. I'm on the call side. My short strike is at 4,100, so that 4,100 level is probably a major barrier for the SPX to reach, considering again that Powell is going to be speaking tomorrow, and so I think the market participants are going to play it very cautiously today, because folks just aren't aware. They don't know what Chairman Powell's commentary is going to entail. Okay, so I took in a credit, so I sold 5 contracts on each side. This is a $5 wide. And so my credit I took in is $175. As you can see here, I've already made 14% of that. And then I created this spreadsheet. One of the things I look at, so I like to look at the open price, and then seeing what would be a 0.5% move, a 1% move, and a 1.5% move, et cetera, to the upside, using the open price as a reference, because rarely does the market move in a day more than 2%, right? So normally what you'll see over the past 20 years I'm speaking about is that the majority of your highs for the S&P 500 with respect to the open price will be less than or equal to 1%. And the same thing with the lows, right? So just being, so I'm on the upside, and if I'm at 4,100, so I'm at 4,100, so that's roughly, looking at the spreadsheet, that's a little over 1%. And again, the fact that the market finished up 1.6% this past Friday, that's a high probability position to take, right, on the call side. And then on the put side, the same thing. On the put side, I'm actually close to the 1.5 times the expected move, and also I'm close to roughly a 1.5% move to the downside, right? So looking at my spreadsheet here. So again, a high probability position to be in. Again, we don't speak of certainties when it comes to trading. We speak in terms of probabilities, right? So we're looking at putting on high probability trades. So I can pretty much say with high confidence that there's a high probability that I'm going to walk away with $175 on this trade. And again, I'm just keeping it small. I've been trading the SPX since September of last year. Before that, I would trade a lot of the blue chip stocks that are in the S&P 500, and I would put on the position for like 30 to 45 days. And I've done well, but I really like this SPX 0 DTE, and sometimes the 1 or 2 DTE as well. So this is going to be my trading strategy going forward. and I'm really just mastering the personality, if you will, of the SPX. So with that said, I'll come back and give you guys an update as to how the position is panning out, maybe a couple hours from now. So stay tuned. All right, I'm back. So it's 12:50. Came back to check on the position. As you can see here, the price of SPX has pulled back rather nicely. I am not surprised by that. So as you can see here, the price, this here is a 1-minute chart. So the price is pulling back. And again, you know, Powell is speaking tomorrow. Folks aren't willing to invest or risk any capital, considering that, you know, Powell could say something that, you know, is unexpected tomorrow, you know. So yeah, so I'm definitely I'm not surprised by the pullback in the market. And as we can see here, just look at the market internals right quick. As you can see here, the advanced declining indicator is the negative territories. So it's going to be, that's a major headwind for the market, for the price of the SPX. So my position on the call side is certainly, you know, it's certainly at a high probability position, and also the put side as well. As you can see here, the expected move has contracted significantly. It was at, I think, 20 something earlier, and now it's at 11. So the expected move is definitely contracting. So the price of SPX is losing energy, and it's only 12:51. You know, so I expect for the market to probably maybe stay solid and start to trade in a tight range here for the rest of the day. But again, I'm not sure, so we'll see. All right, guys, I'm back. It's 1:10. So I just looked at the position here, and as you can see here, I pretty much made the entire $175. I think I'm just going to close this trade out, and you know, there's no sense of staying in it. So I may get into another trade later on today, but as of right now, I think I'm just going to close this trade out. You know, so that's what I'll do. So that'll be it for this particular video. If I decide to get into another trade, I may record that. I may not. I don't know. But nevertheless, yeah. So yeah, I'll take the 155 of the 175. Not a problem. All right. So hopefully you guys are doing well. Be careful tomorrow if you decide to trade, because Powell will be speaking. I'm not sure if it's in the AM or the PM, but I'm sure you can figure that out. Have a good one.